Hey, we're going to be looking at XLE, ticker symbol XLE. That is the energy sector. So this is an index focusing on all just energy type companies. The last time we checked on this, let me update the chart in the middle of the screen. So this is the 1 month chart. The last we looked at it was around the weekend of March 17th. I have March 19th on my spreadsheet, and it was trading around 77. I wrote 76. I had buy points marked out at 43, which just seems outlandish at this point, and then also 71. It looks like it got very close. It at least touched our buy close to a buy point. Not as close as I thought. We'll look at the technical analysis here in a minute, but I want to first go over some holdings. So you can see they're all in the energy sector. Most of their holdings, so the top 10, make up about 75% of this. Most notably is Exxon, which we do follow, and Chevron, which we don't follow currently, mainly because I think Exxon, being the largest holder, that'll at least give us some more insight into what might be going on with individual companies within this index. And that's really all I need. And of course, those two make up about 43% of this index. So just something to keep in mind that those two stocks really drive this one. In terms of some news, so stocks trade mixed at the open due to this energy pop of the OPEC production cuts. So basically what happened is OPEC, and I'll scroll through to try to find the exact wording, but OPEC wants to cut their crude oil production. Maybe it doesn't go into it exactly like I thought. Maybe it's in a separate article. But more or less, we've been talking about OPEC plus surprise deal where they're cutting production, and XLE surprisingly went up 4% today. And so this kind of makes sense given significantly higher crude oil prices. They're probably going to continue to go higher. And also, I have to imagine this is going to trigger potential shift into different energy production, especially if this is going to go up by so much. Let's go into it a little bit further. So again, OPEC's output is cutting, which, as we mentioned, may lead to a boost in clean energy. So along with this, originally OPEC was thinking of cutting about 2 million barrels of production per day. They've ultimately decided on 3.6 million barrels per day in cutting that production. Experts are expecting that because of this cut, that means the prices are going to go up from about where they were at $80 to possibly $90, if not $100. It then goes on to go into how companies may start to shift into cleaner energy. So it shows, it gives a couple examples of Invesco Solar, Invesco Clean Energy ETFs. This may be brought into our index funds at some point. So actually, let's just look at one. I pulled the Invesco Clean Energy because, again, the Invesco Solar, I feel like that's probably revolving around just solar energy when we want all clean energy as a whole. So this is ticker symbol PBW, which focuses on clean energy, and you can see the 1 month or the 1 year chart. It does seem to be trending downward, so potentially a good opportunity to buy. We currently don't follow this, but again, it might be added. To look a little bit more in depth on this one, right away you can see no one's really making or breaking this company. It's very diversified, and it also looks like the sector weightings are also very scattered, which for a new industry that kind of makes sense. I mean, you're going to need materials to build these things, some sort of consumer cyclical, which also makes sense, and then of course the industrials and technology. That all makes sense. I'm surprised that it currently has 0% in energy. So I guess what I'm hoping for is that these sort of clean energy products, they should at some point begin to confirm their status of an energy type sector stock. And so what I did uh, before this video, I just wanted to go through the top 10 holdings of the clean energy index. We do see Tesla. That's really the only one that I recognize. Uh, I haven't dug into these, but what I wanted to do is just see, are any of these within our XLE index fund? And if we go over to it, none of them are in there, which again, while I'm considering going into the energy sector, I haven't gotten any shares of this. I would like to at some point once it reaches a good buying point for me personally. But what I'm hoping the energy sector index does over time, preferably like the next 5 years, would be, of course it can keep its Exxon, its Chevron, and probably a handful of these other companies. But what I'm hoping they do is over that, say, 3 to 5 year window, is they start to incorporate some of these energy stocks, such as what's listed on the screen. Like, I'm not sure if any of these are in the current energy sector, based on the fact that when we look at this category, it's literally all in the energy sector. And when we go back to the Invesco PBW index, nothing is in energy. So there's not any overlap, which I'm hoping that kind of evolves over time. And I hope whoever's like managing that index realizes that and starts to incorporate these, because these technically are energy resources, energy type companies. They need to start to flow into that sector. And then I hope our XLE ticker symbol starts to, adapt over time and start to include these. I guess the top runners would be this NVTS or possibly EVGO, just to, start to transition into these cleaner energy systems, fuel supplies. But that's just me kind of brainstorming. And again, if they don't do that over time, there's definitely a high probability that we'll add something like a PBW into our index watch list. The last piece, nothing major here. Just again, they're reiterating that whenever you increase the price of the base product crude oil, that goes into making gasoline. It's going to get worse. And so again, just kind of reiterating that OPEC is going to be cutting back supply, which makes the cost go up, which means the end consumer prices for them are going to go up. It's not very good. Well, at least for our pocketbooks, it's not very good. But then whenever you go to the next level, those companies who actually buy these things in bulk, like trucking companies or what have you, that's when they're going to start to realize the constraints here. They're going to see the expenses go up over time. Probably the next year is when it'll really start to kind of be impacting these companies. And that's when they're going to really start to wonder, should we now start to make that transition? And I think that's kind of what I'm not sure if like the American president or the European governments, if they're kind of using this as like, yeah, please drive up the prices because we want to start that transition into the cleaner energies. We'll of course monitor this, and if you have any thoughts on that, it'd be great to read those. But now let's go back. Let's take a look at the technicals. So we still have this uptrend, and what I think I'm going to do here, just because it's not like perfectly parallel, what I want to do is just kind of drag this down a little bit and move this point up, just to give us a little bit more of a more parallel. Maybe I can bring this down just a little bit more. That's pretty parallel. I want to take this a little bit further out, just to give us a couple months lead time. So this mark will take us out to about August, and I'll stretch this one out just to see if we can maintain that type of uptrend going forward. And again, it's not perfect. I mean, you can see it's gone above, not so much below, but again, that's just to catch most of the weeks, and each one of these candles in there, that represents a week. So if anything, it seems like this one trades on the upside, and we could even maybe move this up just a little bit just to catch more of them, more of those peaks. And when we last looked at this on the 19th, that was back, you gotta be kidding me. That was back here during this red line. And what I wrote down in my notes was that it broke the uptrend. So that would have been a good time for us to buy, especially seeing how quickly it snapped back into that uptrend. So we definitely missed an opportunity there. Again, I think I was looking more at this green line, which at this point, you know, I guess just for the sake of it, I'll leave it in there. I am going to remove this blue line and maybe shift this blue line down a little bit just to show some support between about 66 and 69. I tried to kind of slice that in the middle. More recently, I guess we could say we have some support here. Again, it's not like major. I think if anything, let's maybe reduce that line size so it's, hopefully that's not too hard to see on the screen, but we just want to make that so it's like, it clearly doesn't have that strong of a hold. But again, I think the main thing here is you can see we're still in that uptrend. We bounced right back. Really looking back, wish I bought in on this. But I get that the reason why I'm skeptical about entering this is because I'm not seeing them incorporate any clean energy types or sources into their portfolio. If I were to start seeing some of those, even if it was just Tesla, just really any of them, like 2 to 3 of these, I'm sure there's dozens, if not hundreds, of clean energy type companies. If they just were to start incorporating, say, like the top 5, that would give me a better mindset going into this, that I see they are actively including kind of the future of energy and fuel sources. That would mean a lot to me, and that would make me more interested in buying this one sooner rather than later. But again, it's still in an uptrend. I think what is most likely going to happen is these energy companies, I'm hoping that they'll start to just transition into it themselves, such as Exxon and Chevron. Hopefully they just gravitate towards kind of splitting their revenue into, you know, the fossil fuels can still be, say, like 80%, but then start to have like 20% in lithium or whatever other clean energy type. And hopefully we kind of see a shift in that way, and that'll kind of give us a better diversity, but still staying within that energy focused industry. But right now, if I were to update this to like buy points, I think, you know, I'm going to list 67, even though the uptrend is so strong. I don't think it's going to come back to that point, at least not anytime soon. Continuing with the uptrend, I think our next like potential spot would be maybe like 83, because it's currently at 84. So it's like right there. Again, just for me, it's a tough buy. I think companies like Chevron and Exxon will be very in tune with this, and I hope they'll just make the right choice in the coming months, if not years. And what I'm going to do is also update the note to say long-term uptrend intact. And yeah, otherwise we're just more or less trying to buy the dips on this one. It's a very narrow uptrend, which for our purposes that's good, because it'll be easier to target. Okay, it's at the bottom, where if it was a longer or like a wider uptrend channel, you know, we'd have to wait weeks if not months for it to like hit the peak and then down to the bottom. But here it seems like they could do that very quickly, maybe just like a month, 2 months tops. So in that instance, it's good. Again, I feel like they're gonna run into resistance here at the $91, $93 mark. It's done it once back in November, a second time in February, which was just 2 months ago, really. And right now we're hitting the bottom. I think we'll climb back up. And so the question is it going to climb back up to the point where it's going to hit its head on that uptrend and then pull back, or is it going to stall out at about 91, 93, somewhere in that range? So if it gets above that point, I'm definitely not going to be buying at that moment. But again, if it can get closer to this, right now, if it would get back to about 83, yeah, I'll probably buy just a share, just to say I'm in there, I'm paying attention. But outside of that, it's what I'll do is I'll mark this orange, and let me just share the latest update here. And if you're unfamiliar with the colors, we have marked out here. And what I'm also going to do is multiple points of interest, just so we're all on the same page. And I'll make that pink color, because that's all it is. There's nothing really special. It's just noticing that there's multiple points as opposed to just one point. But again, XLE, currently it's at 84. The buy points that I've marked out would be 67 would be great. 83 is more realistic, especially with the uptrend intact. Of course, we have the date, and then that note reiterates that the long-term uptrend is still intact. And resistance points for this one, we're going to mark out 93, and I'm just going to unhighlight that just so it's nothing more than what it is. But yeah, if you have any questions or comments you want to share, by all means let me know. I'd be happy to read those. But other than that, please like, subscribe, and I'll talk to you later. Bye.